Hey, everybody. It's that time of year again. We're in the middle of tax season. One of the questions we're getting from a lot of people that we're talking to out there in the business owner community is, how can I save money on my taxes from last year? The corporate return deadline of March 15th is quickly approaching. This is a really common question a lot of people are asking. Unfortunately, since we're past December 31st, our options are somewhat limited, but there are a few things that you can do. And one of the biggest pieces of low-hanging fruit is, if you don't have one already, you might think about establishing a tax preference, tax advantaged retirement plan through your business. There are a few types of retirement plans that are really specifically designed for small businesses, and two of them you can still create even though we're after the December 31st deadline. Now, the main types of retirement plans for small businesses, one of them that you may have heard of is the Simple IRA. I'll cover that in a future video. For now, we're going to exclude it because you have to have it established prior to December 31st. You can still establish one for 2022, but if you're trying to save taxes for 2021, I'm afraid it's too late. The second type of retirement plan that is available to you still is a Sep IRA. What you do is you go to a brokerage firm, open an account, you sign a couple documents. One of them would be an adoption agreement where the business agrees to sponsor this retirement plan. You can put up to 25% of your net self-employment income into the plan. What you need to know is that if you have employees who are eligible to participate in the plan, you have to contribute for them too. They may or may not be eligible in the year that you establish the plan. The terms of all this are found in the documents that the brokerage firm is going to provide to you. You have a little bit of discretion over these eligibility requirements, but by and large, if you put 10% of your own compensation into a Sep IRA for yourself, you have to deposit 10% of your employees' compensation into an account for them too. It's all deductible, very helpful. The third type of plan is what's called a solo 401k plan. A solo 401k plan is no different than an ordinary 401k plan. It's called a solo, or a one participant, or a individual 401k plan because you don't have any employees who qualify as eligible participants. The deal with 401k plans is that you can put in a bunch of money in a tax preferenced way into a 401k, but you have to pass all these compliance tests. The IRS doesn't like us to set up 401k plans in a way that benefits management over rank and file employees. So you have to balance this equation through compliance testing. The beauty of the solo 401k is it's no different than an ordinary 401k. There are just no employees that you need to balance the equation for. So a solo 401k typically needs to be created prior to December 31st. There was a piece of legislation recently that now allows us to create these things after December 31st before your tax filing deadline. That's another low-hanging fruit. If you have a business where you don't have any full-time employees who work for you, that's another very, very beneficial option. That's it for today. We'll continue shooting these videos and probably release maybe one of them a week if people are liking it.